Well, thanks so much for joining us for this edition of Making Sense, where we talk about our finances, our financial institutions, the current trends, and what's on the horizon as well. We're joined by Alex and Justin from Forest Area Federal Credit Union. Gentlemen, thanks so much for joining us. Today, we are talking about consumer protection, what's in place to protect us and our money, and what perhaps we should all be aware of. Thanks so much for joining us. Okay, so let's start with we've heard consumer protection laws, but explain them. What do they mean to me?
Yeah, absolutely, Mark. So consumer protection laws, they exist to protect the consumer. Sorry to just use the words in a different order to create the definition. But you know what? This world is moving at a pretty fast pace.
Okay.
So knowing that these protections are out there, I think it's important for all of us to take a minute and think about it, because you never know when a scenario might arise that it applies to you. But really, a consumer protection law is really to make sure that people are being treated fairly in the marketplace, that they're not being looked at differently because of who they are, where they live, or certain other protected classes and reasons. They're also in place to help protect all of us from fraud, misrepresentation, unsafe products, unfair practices. These are all things that unfortunately can pop up from time to time. So it's really just nice to know that they're out there, and it provides a little bit of peace of mind knowing that these laws are out there, and that in certain cases, a consumer might be entitled to a refund, a warranty, or just a resolution to their dispute or their concern.
So is it accurate to say, before we get too far into this, consumer protection laws, there's a lot of, it's not like the speed limit. Like consumer protection laws, there's a lot of different laws, a lot of different scenarios are addressed. Is that accurate?
Yeah, absolutely. Lots of different laws, lots of different rules, regulations, different agencies where different pieces of these things fall under. So yeah, there's a lot out there.
And it's a living document as well. I mean, those things are constantly changing, constantly evolving. As new threats pop up, as the new things happen within financial institutions, they're constantly evolving to cover all the new things that are happening.
So are we supposed to know what they are? Like, like, it's an honest question.
No, it's okay. No, you're not supposed to necessarily know what they all are. Just knowing that they exist, and going back to a common theme in so many of our conversations together, having your trusted advisor, having your bank or credit union that you trust, family, friends, professionals in other industries could be considered trusted advisors. So that if something pops up and you say, this doesn't seem right, go to one of those trusted advisors, because chances are definitely, when it comes to certain things related to lending, to borrowing, to deposits associated with finances, your bank or credit union, we're going to be there for you and be able to help you out and look into that a little bit further.
So it's kind of one of those things where when we find ourselves, there ought to be a law against, there may actually be a law against.
Correct.
Absolutely.
Well, that's good. All right. So what is the role of the CFPB, which is the Consumer Financial Protection Bureau? What's the role of this bureau? What do they do?
Yeah, so the bureau, they were actually born out of the 2007-2008 crisis. So after that happened, they realized that there was a lot of predatory things that were happening within some financial institutions, not all, but some. And so this group was put together as a way to help navigate and manage the rules and the laws that we're talking about. So, I mean, they kind of oversee all of the financial industry. So they kind of have they're a regulatory body of the Federal Reserve, but they have they have the ability to place restrictions, to place fines, all kinds of different things on financial institutions if those financial institutions are found to be doing things that are unlawful. They are in place for the consumer to make sure that there are not things that are being done to them that are inappropriate from a financial perspective. They do a lot of educational stuff as well. You talk about, well, are we all supposed to know everything? The CFPB tries to do a good job with being able to educate the general public on what their rights and laws are, to be able to go against financial institutions if there is something that's being done that shouldn't be being done. So, yeah, basically the enforcement of all the rules and regulations that we just talked about.
So they're a consumer's advocate?
Absolutely. Yeah.
And it sounds like also an institution who is following the rules and doing what they should. Also, they're your friend.
Yeah, so they're not necessarily a financial institution, but they're the ones governing the financial institutions.
Right.
Yes.
If you are a financial institution that's following the rules and doing what you should, they're also your friend.
Yes.
It's when you're not doing when an institution is not doing what they should, that's when you don't necessarily want to get a call from the CFPB. Is that right?
Correct. You're absolutely correct.
Okay. We need, a good guys, bad guys kind of thing. All right. So, all right, here's something that maybe it's one of those. It's the FCRA, which may not sound familiar to a lot of people, but I was actually familiar with this term because I've heard it before. So you're going to help fill me in where I've heard this thing. It's the Fair Credit Reporting Act. So first question is, where would I have heard this before in reference to something? Is it a loan? Was it a mortgage? Something like that? And what is the Fair Credit Reporting Act?
So, Mark, chances are the reason you've heard this is because along with consumer protection laws, there's disclosures and disclaimers that lenders and savings and deposit banks are required to give. And chances are you've seen and signed some papers with big, bold letters, Fair Credit Reporting Act, near the top of it, where it's notifying you of your rights within that transaction. And again, like so many consumer protection laws, the Fair Credit Reporting Act, it exists to make sure people are treated fairly and are not discriminated against for protected reasons. It really regulates how consumer credit information, the credit report, the credit bureau, how that information is collected and shared and used. Okay. And it gives the consumer certain rights as it relates to the credit report and to the activities that they're engaging in. One, for example, consumers have the right to access their credit report once a year at no cost. Okay. And that's a great thing to do. We highly encourage it because you can take a look at that report and look for things that seem out of place. I mean, it's a great way to help detect fraud. It's a great way to clean up maybe accounts that are really old and sitting out there that could be potentially used in a fraudulent manner against you because, you've got this open credit line with a box store that, from years ago and you haven't used it in 10 years. It's just kind of makes you aware of the risk that you might have out there. The other thing Fair Credit Reporting Act does gives the consumer the right to dispute inaccuracies on their credit report. It allows you to be notified if a business takes adverse action against you based on the information in your credit report. If you apply for a loan and you're denied, that's considered adverse action. You have the right to be notified of those actions. And the act also limits who has access to your report. You can't just go out in the world and pull credit reports on anybody you like. There's rules when and how we're able to pull those credit reports. So that Fair Credit Reporting Act provides all those rights and protections. Again, another example of just another act, another piece, another rule that really gets specific in protecting consumers.
So is it accurate to say that the Fair Credit Reporting Act is a consumer protection law?
Absolutely.
Okay. We're going to baby step our way through this, okay? So that we all understand. All right. Another act, which I'm going to go ahead and assume now is a consumer protection law, is the Truth in Lending Act. Again, another term that I probably read in boldface on the top of something and then kind of skimmed through everything underneath it because that's how we sign financial documents. How does that protect me? First of all, what is the Truth in Lending Act, and why is it good that that's in place for me?
It's another piece of protection. Okay. This tells us, hey, lenders that are operating under these rules, you have to do these things. You have to make this information available. And that's why you've seen these words in bold letters on the top of some of the pages in a transaction that you might do. See, the Truth in Lending Act requires lenders to disclose the full cost of credit in a clear and understandable way. Mm-hmm. So that's important, isn't it? we've maybe heard the term predatory lending. That is a thing that is out there. And what this protection, this act is doing is saying, hey, lenders need to be upfront and honest. They need to be transparent. They need to do it in a clear and simple way. We have to make sure that we're disclosing to consumers clearly and understandably the information about their loan, what their interest rate is, how that translates into an annual percentage rate, any fees that are associated in the transaction, and the total cost of borrowing. Because, I mean, we all pretty much know you borrow money, you pay a little interest in that monthly payment, and eventually you pay the car off. But under this act, we're required to show you what portion of that is your principal payment, what portion is your interest expense if you take the full term to pay back, and then what the total of those two numbers is at the end. Because, if you're not careful, that's what you're really going to end up paying for that item that you're financing over the long term. And it's through this act, we are required to disclose it to you very clearly in that way. And you'll often see it on most financing documents. There's about 4 big boxes very prominently displayed with big bold lines around them talking about truth in lending, and it breaks those numbers down so that consumers can really see it, and then most importantly make an informed decision with that information, so that they don't get into a borrowing transaction that really isn't in their best interest. Of course, continue working with trusted advisors, reputable lenders and service providers, and they're going to lay this stuff out for you. They're going to make it easy for you to see, and they're going to walk you through it and talk you through it, and even make recommendations along the way. When you're working with a trusted advisor, look for that. Look for those conversations. Look for those pieces of advice, because they're going to point you to stuff that's included in things like truth in lending and help you guide you through those decision-making processes.
Yeah. So, if you've ever signed a mortgage and you thought, okay, I bought the house for this much. And then when you go and you actually, I imagine, get the Truth in Lending Act kicks in and you see how much that house is actually going to cost you after 30 years. I'm going to pay how much for this house in 30 years?
Yeah.
The Truth in Lending Act in action.
That's it right there.
So we have that act to thank for that gulp moment where you're like, oh,
that dose of reality.
That dose of reality. But that's a good dose of reality that we have talked about this before. Anytime you borrow money, you really need to think about the cost of that. And the Truth in Lending Act provides us that cost of what it's really going to cost you over the long run. Is that accurate?
Yes, absolutely.
Are all of these evolving, Alex? Like, are all, as the world changes, do all of these acts kind of change with the world to ensure that we are protected?
Yeah, they absolutely do. I mean, there's things that as different products are launched, different things that are happening. There's different loopholes that may be found later on. They're like, oh no, we got to close this down. And so they create an act to be able to help consumers to know what their rights and what they have the ability to do are. So absolutely, they evolve over time, all the time.
And so it's so how financial institutions, I assume, people involved in that side of it, stay up to date on these acts as they evolve and change and everything like that. It's probably a little easier for you because that's the world you live in. How do we as consumers stay up to date on the constant changing? Is that hard?
It is a difficult question to answer. I mean, there's so much going on, and if we're being honest, Mark, I would say that even within our credit union here, there's going to be people that aren't going to know every regulation. Sure. So that's why we have specialized people that are able to know the laws, know what the consumer's rights are. We've got people for everything that's going on, but there is a lot to be able to know and understand as a consumer. And that's why it's our job to be able to explain what those rights and those laws are to our consumers.
So it goes back to dealing with people that you trust to help guide you through that process.
Absolutely.
Yeah, I've heard that from Justin a few times. Like we all don't need to be experts in this, but it's really good to have a friend or someone you trust who is an expert to walk you through this. So when it comes to consumer protection, obviously if you're taking out a mortgage or a loan or something like that, we will see these documents. But we are probably far more likely to encounter potential identity theft. I mean, how many times in a life do you really sign a mortgage, right? But every single day, identity theft could be a concern for you. So how do consumer protection laws, how does all of this tie into to identity theft?
Yeah, I'll jump in here really quick, only because Justin talked earlier about getting your credit reports on an annual basis, right?
Right.
There's other types of companies out there that allow you to do credit monitoring on a monthly basis.
Okay.
Quick story, just to kind of share what that in action. We just had our third child, and we were at home for the first day, and I got an email saying, "Hey, did you apply for a credit card?" And I was like, "I've been at the hospital for the last 24 hours. No, I did not." So we had to spend a bunch of time actually digging through and finding out who applied for credit in my name. We were never able to find out, but we were able to act quickly, contact the financial institution, let them know that this is a fraudulent pull, and it actually was not me. We were able to get things closed down within a few hours. But had we not had credit monitoring on and having that stuff monitored every day, and that actually got live, the credit card was live, it would have been a lot harder to be able to get that closed down. So making sure that you do have something set up to be able to monitor what that credit looks like on your behalf on a daily basis. So you're not having to go pull credit all the time on yourself to see what's going on there. So that's absolutely one way to be able to help protect yourself.
Yeah. And, two other things that regular monitoring is important. Make sure in all of your online transactions, you're using strong, unique passwords, change them frequently. Please, no, not even please, just don't do it. Don't share your personal identifying information. Don't share your passwords. People are out there online, over the phone, through text message, trying to get us to share one piece of information about us personally so that they can then use it against us. Make sure that you don't fall for those gimmicks, and consider fraud alerts and credit freezes and those other types of protections that are available out there, or things you can do to give an added level of protection.
Okay, I'm gonna ambush you guys with a question here. Help me with this. Okay, so credit monitoring. There's the wives' tale of, well, you don't want to check your credit too much because it wrecks your credit score. Okay, is there truth to that? And does credit monitoring change our credit score?
Yeah, that's a good question. So if you do pull your credit if you have someone pull your credit frequently, then yes, it can lower your credit score by a few points here and there. If you have credit monitoring, it is not pulling your credit per se. So there's a difference between like a soft pull and a hard pull. Okay, so a hard pull actually pulls your credit and says that you are actively looking for a loan of some type. A soft pull is it's not necessarily, you may get that if you're being hired somewhere, they may soft pull your credit. Okay. Credit monitoring, things like that, it does not actually impact your credit score. It's the hard pulls that will impact your credit score.
So don't be afraid to check your credit score or sign up for a credit monitoring program based on the fact that you believe it will do that, because it won't do that, correct?
Absolutely. Justin may have more to jump in there, but that's absolutely true.
Justin? That's pretty much it. Don't be afraid to use it. Use reputable companies if you're getting involved with credit monitoring, but they're a good tool.
If you okay, we're kind of going down a hole here, but if you freeze your credit, like that you're not going to be applying for anything, and you put a freeze on it, can it still be monitored?
Yes, it can still be monitored. The only time that it will not be able to be pulled is if you're doing a hard pull. Okay. The monitoring will still happen. If you need to go apply for a loan or something like that, you'll have to go unfreeze it and then refreeze it after you're done.
Makes sense. All right, so why is all of this important besides the fact that it deals with our money?
So my simple answer to that is knowledge is power. And we're living in an age where we're we're running through transactions really, really quickly. Auto loans, even mortgage loans. I mean, in the industry, everybody's talking about speed to close, and that's what consumers want. That's what our members and our customers want. They want these things to happen as quickly as possible. So, I mean, you can even get, some are coined one-click loans. You know, your financial institution pushes you an offer, you click once in your online banking, and you've got the offer and the money's in your account. I mean, it happens and can happen really, really quickly. Since it's happening so quickly, and so many of these financial institutions are delivering on that speed of service, as a consumer, don't forget that you still have rights, you still have protections that are out there. And it's okay to slow down, to ask questions, to inquire about those things, and make sure you fully understand what's going on. If speed of service is what you want, our banks and credit unions, people that trusted advisors, it's okay to do these transactions quickly. But again, if you're ever feeling just a small question mark in your mind, take a quick pause, ask some questions, because there's protection out there and there's rules that lenders such as our credit union and all these credit unions and banks, we have to follow them. So don't be afraid to ask questions about it. It's your money. This is the consumer's money. It's their reputation. It's their credit history that's on the line for this stuff. So it doesn't hurt to know what kind of protections are that you have available to you.
Yeah, Justin, you said something there. A one-click loan. If there are places that are one-click loans, do they still have to follow like the Fair Credit Reporting Act? Do they have to follow the Truth in Lending Act? If they're
Absolutely
still have to follow this?
Yes. Yep. Even though we've sped it up, the process feels, and really is faster. All of these rules still apply, and that's where ask those questions. If it's feeling a little bit questionable, ask the questions. We've done our best to, and we will ensure that we meet all of these rules and regulations. But never let a lender push you too quickly. If you're operate at your speed of comfort. We love to make things easy. We love to make it fast, but it's more important that we get it right and we keep a good relationship with our borrower in the process.
I think we've all gotten pretty good at being able to recognize the difference between convenience and pressure, right?
Yes.
So we're able to do that. Alex, anything else you want to add?
The only other thing I'll add is the only group that we haven't talked about is the NCUA. And what they do, they are the regulatory body over all credit, and just like the FDIC on the banking side. And they're the individuals that ensure they have the insurance in place for consumers up to $250,000 for your funds and the financial institution. So just another regulatory body.
Okay, but wait, you said NCU?
NCUA.
What's that stand for?
Yes, the National Credit Union Association.
And so if we're familiar with FDIC, that would be the counterpart for credit unions?
Yeah, so the FDIC is the regulatory body for banks.
Okay.
And the NCUA is the regulatory body for credit unions.
Okay.
Yeah, so we go through annual exams with them. They come in, they review everything that we're doing, making sure that we're not a threat to the Share Insurance Fund, which that is it's a pool of money set aside by credit unions in case there is some type of credit union failure. They have the fund set aside to be able to insure those credit unions. So they come in and they're just making sure that the credit union members are safe. They're protected. They're taken care of.
So for years, banks touted, FDIC. Like that was like, you had that, you felt good, right? Mm-hmm. Same purpose with for credit unions with that labeling and earning that endorsement. Is that should we be looking for that if we're looking at a credit union?
Yes, every credit union lobby should have an NCUA sticker in it showing that they are in fact insured by the NCUA, and it's up to the same $250,000 whether it's a bank or a credit union.
So it sounds like overall there are a lot of things in place to protect consumers. Is that accurate? Regardless of what we're doing, whether it's a loan or any kind of financial transaction, there are laws in place with our best interest at heart. Accurate?
Yeah, that's what the lawmakers are trying to do. They're trying to look out for their constituents, the consumers, to make sure that they're taken care of and that their financial institutions are not taking advantage of them.
Well, we appreciate that. And if we have, since many of us are not writing that legislation, many of us have not read all that legislation, and many of us probably don't understand it all, even if we did read it, the best thing to do is if you have a question, go talk to your trusted credit union financial experts. Talk to them because they are familiar with this because this is their job. Accurate?
Accurate, 100%.
All right, gentlemen. Hey, thank you so much. I feel a little smarter and I feel a little better protected. So that's good. And we'll take this advice and we'll catch everybody next week.
Sounds good. Appreciate it, Mark.
Thank you.